Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. We are looking at ticker symbol ASO, that is Academy Sports and Outdoors Inc. We're going to see if the stock price should be higher or lower. We'll look at some advanced charting and see what institutions and hedge funds are doing, plus much, much more. So let's go ahead and dive on in together. This has not been trading very long, so I really actually just want to jump into my Thinkorswim and run my Fibonacci's on this. Let me do a couple things here. I apologize. All right, so we are on the monthly chart, and uh, I have done this one before. Um, Basically, and this must have been when this stock first came out. So every dip is a buy sell. So we got to buy here, sell here, buy here, sell here, buy here, sell here. So that's basically the lazy trend I drew on this. I want to do something a little bit more defined. So 1205 is our low, 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 and 75.73 is our all-time high. There we go. Okay, so for ASO, I want to see it get down to 40s. I don't know if this is going to continue to trend straight down like this, or if it's going to kind of U shape and then boop, touch it. So I love this as a foundation. Let's go back to Le Chat. Let's just see what's going on here. Ooh, sales are going down, EPS going down. Shares outstanding are going down too, which is good. That just means natural and organic accumulation of the stock. Why is the sales going down? And I have a lot of questions. Before we dig into anything crazy, let's run my proprietary top secret calculation here. This is going to let us know where the stock price is trending. So they have a $3,830,000,000 market cap, and I need to add one more zero. 3 billion. Yep. They do have income of 501,690,000. And they do 6,140,000,000 in sales. That's insane. Oh no, I see. Okay. Look at their quick ratio. If they had to close their doors tomorrow, they would not be able to pay off all their liabilities, debts, notes. So that's a beige flag number one. Now we're going to go down and just take a peek. So Q1 2023, they did 1.36 billion in sales. I'm sorry, Q2 2024. Q2 2023, they did 1.38 billion. So they went down year over year. Q1 of 2024, they actually beat. So we see kind of a mixed bag so far. It looks like Q1 is traditionally really strong for ASO at 1.7 billion, 1.7 billion. I'm guessing Q1 2025 might be 1.8 billion. And I only say that because in 2023, it went up about 48 million. And if it went up 48 million for 2024, 2025, it'd obviously be 1.8 billion. So let's see how much cash they have on hand. Getting carried away here, having too much fun. So they have 378 million in cash, which is historically actually the most they've had in the past few years. So 378 million, 140,000. Good for them. Total debt. Not that bad. 1,582,880,000. Okay. And let's just take a peek. Total assets 4.8 billion, total liabilities 2.9 billion. They do have a $1.9 billion buffer, but I am concerned. I'm going to say I'm just concerned because we can see here the gap between the assets and liabilities. It kind of seems like it is staying static, you know, like for Q1 they had 4.7 billion in assets and 2.7 in liabilities. So that's about a $2 billion buffer, but I mean, look at the 49 extra million compared to the 3. So obviously 1.9-ish billion, but 1.9 billion is not a bad buffer. I don't see any directors, senior vice presidents, CEOs buying, which means I think the stock is still a little bit too expensive because we're not seeing insider ownership increase. So I would like to see that happen before I even consider taking action, really. Um, and looking here, we can see the strength is going down, momentum is going down, money flow going down, relative momentum indicator also going down. I think we just let this go down until we, excuse me, until we see the CEO buying. They make 6 billion and they are profitable. Why why are they in such a horrible cash position? Like if they closed everything tomorrow, they would not be able to pay off their liabilities. So what's going on here? The stock is cheap, and don't get me wrong, you don't want to fight the trend. So it's cheap. My calculation that we're going to go through here is going to show us a really sexy, attractive stock price. So the shares float are 70,980,000. $130 stock price. Yeah, I told you this is a $53 stock. It got to 76. So, and then what are institutions and hedge funds doing? Good question. I mean, this looks like a really, everything about this looks good. The margins look really good. The only thing I'm concerned about is right here, the quick ratio, and they're giving a dividend, which means they're giving some of their cash away, which my calculation here does not account for. This is not built to account for dividends. So this 130 should actually be lower because they are giving some of their free cash flow away. So put that in the back of your mind. So old data shows that they own 99.9% of the stock. That's old. New is 111, so that's about an 11 plus percent increase. Vanguard decreased 6%, FMR decreased 5%, BlackRock decreased 6%. So even with the big boys and girls decreasing, we must have a lot of these smaller funds, institutions, brokerages adding. So, could you add today and the stock would still be undervalued? Yes, but again, it appears that the CEO, the C-suite think this stock is still too expensive because they're selling still. Um, I would wait. I mean, we've got time. I think we wait for the stock to come down maybe here. Maybe it comes down and makes like a cup. That would be the real, that would be really cool. Looking at, yeah, we've fallen through. So this is just kind of in a free fall. Let's continue. We're going to see some good resistance around $44, $45, possibly 40. It depends on when the stock comes down and drifts, but it will get caught and it will probably consolidate for a minute on this and then maybe test this Fibonacci arc. It's really hard to tell, but yeah, that's basically where we're at. I mean, it's just in a free fall. And whoa, 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 whoa. Yeah. So that's my take. The stock has not traded long enough. They need to, I would get rid of this dividend, clean up the quick ratio. Um, but I mean, everything else looks pretty good. I just want to look at their website. Okay. Oh, so they're like a sporting goods, outdoor retail store, hunting, fishing, camping, equipment, gear. Oh, interesting. This is like a like a Dick's Sporting Goods or Big Five, but Big Five is they did not switch over to e-commerce fast enough. Big Five is going down big. Big. How many times can I say big? Um, yeah, I mean, part of me is thinking I should like it's not bad to add here, but at the same time, um, you don't want to fight the trend. And I mean, it looks really good. 32% gross margins. Sales past 5 years is good. EPS past 5 years is good. I mean, there you can definitely see they've kind of plateaued. Have they reached their peak and now they're never going to grow again type thing? Or can they kind of come out of this even stronger? We really don't know. Um, so it's really hard to tell. And I'm not familiar with kids' athleisure wear or even athletic stuff. So yeah, very hard to tell. This would be a wonderful acquisition by like Dick's Sporting Goods or Cabela's. Um, but yeah, this I don't think it would hurt to add maybe like 5, 10, whatever you can go without seeing taken out of your bank account for a week, 5, 10, 15, 20, $100. Um, add to that for the next 6 months. And if the dip continues, kind of keep that up. But we don't really know where this thing falls. And we kind of do have a head and shoulder pattern. We have our left shoulder, head, right shoulder peaked, and now coming down. So also like an Elliott wave, we have our one. So pull up a picture of an Elliott wave. I wonder if there's a site. Mm, So basically, I'll draw it here. Not that. So we have 1, 2, 3, 4, 5, and 5 is the peak. Now we have A, B, C. It really just depends. It's hard to tell where the C is going to be. So it's it's playing out like that. It's an Elliott wave, essentially, kinda. So that's my thoughts. As much as I think this is a great deal, and the price to earnings is really low, forward price to earnings is really low. They beat on Q1. I mean, they beat year over year. Q2 they missed, but I mean overall, like this is a multi-billion dollar company that is undervalued at the end of the day. So I'm gonna wait. That's all I've got for you guys. I hope you're doing well. Thank you so much for watching. If you made it this far, consider subscribing or hitting the like button. Take care.